Hometown Station Real Estate and Financial Guides are back on your hometown station, AM 1220 KHTS, to share with you what you need to know in order to navigate the sometimes confusing markets and guide you toward financial wellness. Reach out to them for advice at 855-DON-GINO. And now back to your hosts, Don Getling and Gino Franti.
Listening to our introduction, I was listening, and not only was it incorrect today, because it's not Don Getling and Gino Franti, but Steve Korn and Gino Franti.
There you go. Glad to be here, Gino.
I was also thinking at what the tone was. It says to navigate you through the sometimes confusing markets, and I can't think of anything more confusing than what we're discussing right now. Long-term care, and the reason it's confusing, I think, is like we talked, it's a new product. It's something we're not all accustomed to. I think with insurance, you really need a professional to guide you. I think we've all become comfortable with your house insurance, with your car insurance. Once you start getting into life insurance, that gets a little more complicated. Health insurance, a lot more complicated. But really important here, could really make the difference of someone being able to retain their assets for their children or not, or have a quality of care during their horizon years.
That's
I
right.
like that. I like that term,
I like to refer to the subject of insurance as the elephant in the room, being that the majority of everybody in this room have had a significant weight loss that we talked about at the beginning of the show. This truly is the elephant in the room. So we're at the top of the conversation with regard to long-term health care, and we were talking about some of the subjects we're going to kind of delve into, which specifically I brought up the idea of what age do you pull the trigger on getting such a plan. And Gino, you were talking about wanting to find out about what the benefits really provide, to somebody who wants to hang on to their legacy instead of paying for it at the end and not leaving it to their kids, right?
Yeah, and everybody's got different strategies, and that's why I think it's really important that they reach out to a professional like Scott Zimmerman with Corporate Strategies, who's joining us today and educating us on this relatively new form of insurance, but not brand new. And we talked a little bit about it, and it's kind of, and I'm going to oversimplify this, but there's like a WXYZ formula is going to give you the cost. So it's kind of like a pick your part, put together formula. So if you want to be able to make it more affordable, you can get different types of coverage, but really it sounds like one in two of us should have it based on the statistics, right?
Statistically, yes. And the other thing about the setting up your policy the way you want it to be, it doesn't have to cover the full amount of care, but maybe you will partially fund it and use your own. Hopefully it's one of these things you buy that you really don't even need, and hopefully it's the biggest waste of money ever, right? Who wants to deal with this? But you can always set up the policy where you can partially fund. Maybe you can't afford to fund the full thing right now. When you get older, you can hopefully have a lot of assets, you'll have plenty of money, so maybe the policy will pay 75%, and you have to go into your pocket for the other 25%. That works too. It's better than nothing.
So let's clarify that, because I think we've been tippy-toeing around it, but basically what I'm buying here is a magic number. Almost like term life insurance, where you say I'm buying a $100,000 policy or I'm buying a $200,000 policy.
Right.
Is that similar? Would you, other than how you arrive at the number, because you said there's a certain amount of time, a certain amount of dollars per day, and all that. At the end of the day, it's about a number, right?
It's about a number, and you are right to a point, because you're not sure what it's going to be in 20 or 30 or 40 years when you need it. But if you set up the policies correctly, there should be enough money, or almost enough money, or maybe too much to take care of what you need.
And if there's too much, you go into the Four Seasons.
That's right.
That's it. Loving that. So when do you pull the trigger on getting a policy? What age do you look at that? I mean, what's the criteria by which we should look at?
You can buy this policy from 18 years old and on, but average people age group is anywhere between 55 and 65 as the average people buying it. I want to tell you, I'm 46 years old. I bought it when I was 45. And the reason I bought it is it was less expensive, hopefully locking in my numbers, and I want to bring up a point to that. But it's a lot less expensive when you're younger, and the other thing is it's easier to get when you're healthy. If you have a health issue, it may be difficult to get if you can't even get it if your health issue is pretty serious. But having said that, no insurance company's rates are guaranteed. So even if you bought this when you're 40 or 30 or whenever, or when you're 60, they can raise your rates at any time, as long as they raise everybody across the board's rates, and they have to it has to be approved by the state. So they just can't say, hey, we're going to raise your rates. everything has to be approved by the state to actually do it.
But if I have an inflation rider, am I going to get covered under the inflation rider?
Inflation rider is still in your policy. It all has to do with premiums. If they raise your rates, it's just based on your premiums. But everybody's rates are getting raised the same. They could say, we're going to raise everybody's rates 15%. And that everybody, it doesn't matter what policy you have, your rates are going to go up 15%.
But that's not covered with the I can't offset that with the inflation rider.
No.
That's not considered a portion of inflation.
No, the inflation protection just goes on top of your daily benefit.
Oh,
Remember
got
the-
it.
yeah, the
That's
daily
tied to the
benefit.
daily benefit.
Right. That's what's going to
Got
keep
it.
up to, for when you're 80 years old and you need it, you bought a $200 day policy now. When you're 80, maybe it'll be worth $800 a day.
And I understand that 100%
Right.
crystal clear, because it's the exact opposite of what happens with real estate and inflation, where you take out a mortgage today and it's so much easier to pay for it 20 years from now than it is today,
Right.
because it's the exact opposite of that.
Right.
Oh, fantastic. That's
So
really good.
how long do you pay for this insurance?
Well, you pay for it your whole life.
I see.
Yeah. Unless you need care. If you need care, most policies, if you go into for home health care benefits, you stop paying for most policies. You stop paying for benefits once you start using the care. And for nursing home care, if you have to go to nursing home, there's usually you pay for it for 90 days, and then once you start getting the care, your premiums stop.
Now, we've talked about this in the past before, and I don't quite remember how it works, so tell me. I don't have disability insurance, but I break my leg and I'm hurt and I'm going to be laid out for 6 months. Can I use this policy to pay for that?
That's a great question. No. But what you can do is the way to qualify is they're called ADLs, Activities of Daily Living. So if you can't do any of 2 out of 6 ADLs, then you immediately qualify. So walking, see if I remember them all. Walking, bathing, dressing, transferring. One is toileting, and I forget what the other one is. Feeding. Eating. Okay. So if you can't do 2 out of 6, you immediately qualify to have somebody come in and take care of you. So if somebody falls down and they break their leg and they can't get around and they can't get themselves dressed, that would qualify for somebody to take care of you. But if you have a 90-day waiting period, it means you're covering the first 90 days and your leg is going to be better by then. But if there's something serious, or if you had a shorter waiting period, then it would qualify to have somebody take care of you.
So if he broke his leg, couldn't take care of himself on a temporary basis, and became healthy again, and came off the insurance benefits, would he continue to pay?
Yes.
Okay.
Yes.
The policy would
yeah.
still be enforced. I would have just used a time segment of my benefits, correct?
Right. And and one more, if you don't mind, one more thing.
Yeah, no, absolutely.
I had a client out here in Valencia, wrote her long-term care insurance, and what happened was she was walking her daughter's dog. The dog took off. It was a big dog. She fell down and broke her femur in 2 places.
Oof.
Surgeries. She was literally bedridden for months. It was crazy. But they had somebody come into their home and take care of her for, I forget what it was, 4 or 5 months. It was the greatest thing. She thanks me all the time. She happens to be a family friend, but it was a broken leg situation, and she wasn't old. She was maybe 60 years old or something like that.
Yeah. So then, absolutely. So this is something to get as young as possible, and have that type of coverage to make sure that in case you do find yourself in a situation that you cannot take care of yourself, can't meet those criteria.
Right.
The 6 pieces.
2 out of 6
ADLs.
ADLs, Activities of Daily Living.
In fact, so what I'd like to do is I'd like to invite everyone to our Facebook page. You go to donandgino.com, click on the Facebook logo, and if it's okay with you, could you email me those ADLs today so I can post them on our Facebook
Yes.
page? Awesome.
So we've talked about financial and personal wellness to the max. I mean, I can't think of too many things that would affect all of us as adults more than this area of discussion. So Scott, thanks for
Thank you.
expanding on that. And how can our listeners get a hold of you to discuss their options further?
They can call me at 818-377-7270 or email me at scott@corpstrat.com.
Awesome. Thank you so much. I'm really, really proud to have you on the Don and Gino Real Estate and Finance Show. Steve and I will be back with a real estate professional you cannot afford to miss. So talk to you soon.